China's export to lead the world economy. Now, China's export growth unexpectedly picked up speed in July, offering an encouraging boost to the country's economy as it struggles to recover from the COVID-induced slump. But weakening global demand could start to drag on shipment in coming months. Export rose 18.0% in July from a year earlier, the fastest pace this year, official customs data showed on Sunday, compared with a 17.9% increase in June and beating analysts' expectation for a 15.0% gain. Outbound shipments have been one of the few bright spots for the Chinese economy in 2022 as widespread lockdowns hit businesses and consumers hard, and the once mighty property market lurches from crisis to crisis. China's export growth surprised again on the upside. It continues to help China's economy in a difficult year as domestic demand remains sluggish, said Zhu Weizhang, chief economist at Pinpoint Asset Management. However, many analysts have expected exports to fade as the global economy looks increasingly likely to be headed into a serious slowdown, weighed down by soaring prices and rising interest rates. A global factory survey released last week showed demand weakened in July, with the orders and output indexes falling to their weakest levels since the onset of the COVID-19 pandemic in early 2020. Now, China's official manufacturing survey indicated activity contracted last month, raising fears that the economy's recovery from lockdown in spring will be slower and bumpier than expected. But there were signs that transport and supply chain disruptions caused by COVID restrictions were continuing to ease just in time for shippers preparing for peak year and shopping demand. Now, foreign trade container throughput at 8 major Chinese ports rose 14.5% in July, speeding up from the 8.4% gain in June, according to data released by the Domestic Port Association. Containers throughput at COVID-hit Shanghai port hit a record high last month. Now, July export may also have been buoyed by pent-up demand from Southeast Asia as supply snarls eased and factories there ramped up production, Bruce Peng, chief economist and head of research at Jones Lang Inc., said in a research note. Moreover, amid a negative and interest rate and surging inflation, some European and U.S. customers may have front-loaded orders to ensure they had goods on hand with lower costs, he added. Still, while export growth remained high, mainly backed by price factors, the volume of exported goods dropped in July, said Chang Gran, a senior analyst at Xinjiang Investment Research Institute. Now, looking ahead in the second half of the year, exports are expected to be resilient in the short run, but weakening external demand may pressure them in the fourth quarter, Chang said. Chinese exporters are facing mounting headwinds. One company executive told Reuters, "I am very worried about the impact of soaring U.S. inflation and rising China-U.S. tension on our export orders." Jing Chaofeng, general manager at Nice Seoul, one of Amazon's top rattan outdoor furniture sellers, told Reuters, "If retaliatory tariffs like those in the Trump era happen again, it would deal a blow to our businesses," Jin said, adding the export value of his company jumped 70 to 80% in July year on year. Now, imports still to peak. After a shaky second quarter, most analysts had expected China's import momentum to pick up modestly in the latter half of the year, supported by construction-related equipment and commodities as the government ramped up infrastructure spending. But imports last month were again weaker than expected, suggesting domestic demand remains soft. Import rose to 2.3% from a year earlier, compared with June's 1% gain and missing the forecast for a 3.7% rise. Despite an uptick in the domestic demand and loosened COVID control measures, the weak performance of the production side dragged on imports, said Zhu Shunzhang, a researcher at Site Securities, adding that COVID flare-ups may hinder the economy's recovery. Crude oil imports in July fell 9.5% from a year earlier as fuel demand recovered more slowly than expected due to fresh virus outbreak. The volume of imported integrated circuit, a major Chinese import, dropped 19.6% in July from a year earlier, according to Reuters' calculation. That may be an additional red flag for export, as a significant amount of the country's import are components for goods that are then re-exported. China posted a record $101.26 billion trade surplus last month, well above the $90.0 billion surplus analysts had expected. The country's top economic planner said last week that the economy is in the critical window of stabilization and recovery, and the third quarter is vital. Top leaders recently signaled they were prepared to meet the government's growth target of around 5.5% for 2022, which analysts said had been looking increasingly unattainable after the economy narrowly avoided contracting in the second quarter. The International Monetary Fund in late July sharply cut its 2022 growth forecast for China to 3.3% from 4.4% in April, citing COVID lockdowns and a worsening crisis in the country's property sector.